Yeah, hello guys, welcome back to HumbleFx. Okay, this is a strategy I'm going to be releasing to you guys this morning. It is how to catch the spike, how to catch the spike in boom and crash index. Okay, if you look at the chart right here, you will see that I still use my excellent strategies. The excellent strategies is still at work right here. I still use it daily because it works really good. So if you are new to this channel, please subscribe to this channel and hit on the bell notification so you get notified once a new video is uploaded. This channel is meant to bring to you awesome strategies that will change your trading style, change your trading game, and help you make maximize profit. Okay, now if you want to get the settings of this excellent strategy, the ones on the main chart and the first window indicator, it is called excellent strategy, which we use. At least we shall take our trade right here. Okay, boom, we shall take our trade right here and make our profit before a spike will happen. Okay, with that you are sure of your trading success. All right, so guys, check out the video description. You will get to see the video of the excellent strategies and few other great strategies on this channel. You can browse through the channel to see other strategies and apply them. Stick to one of them and you're going to make success in trading. Okay guys, let us get to work. Right, we're discussing a strategy we use to catch the spike. All right, but before we proceed, I would like to tell you guys that spike catching is actually good, it's great, but then it is not also good because sometimes when the market is in an uptrend and in case of crash or downtrend in case of boom, then catching spike will be sometimes not advisable if you have a low account. Or with this strategy you're going to be having here, you could actually trade the spike and make your profit with it. Okay, and once and for the less updates on how to catch the spike, you will have to understand the market trend. First of all, you have to understand the trend of the market so you can be able to know if the market is actually spiking or on a normal trend. If it is on a crash, you want to catch spike, you want to be holding it for a downtrend. If it's on a boom, you want to be going for an uptrend to catch spike with confidence. But when boom is on a downtrend, to catch spike is not predictable because the market can decide to continue to shoot down, and if you have a low equity, then your account will burst before the spike will come. Surely the spike may come and come huge, but if you have a low account that cannot hold the length of the drop down, then you're going to be paying with your account, which is why I recommend trading the candles instead of trading spike. If you have a low account like $5, $10 account, is better you trade the candles and scalp with the excellent strategy than try to go and look for spike, because sometimes you'll be lucky, you get a big spike, sometimes you will not be lucky and you pay with your account. All right, then let's go to the business of the day. Okay, I will not talk more on the one we already know. Let me make it small because I still use it. That's why I will not remove it. Rather, I will rather eh, reduce it because I still use it. I still use it very good. Every day I use it. Now we are interested in this indicator right here and the Ichimoku in the main chart. This Ichimoku, I leave it because it helps me a lot. Even when I'm taking the candles, I still look onto the Ichimoku for some certain point where spike may occur. All right, this is the settings for the let me not miss the settings again this time. Let me give it to you now so that you don't miss it out. All right, we're talking about this indicator here. This indicator, go to your F button and you click on this F right here to get your relative strength index. This one is for the excellent strategy which you can get below this video description. You will see the link there. We are only talking about this particular one here. Okay, so you click on the F button right here and you get the RSI. Okay, the period of this RSI, this period is 8 and they apply to open. Note this, please. Apply to open. Before we use apply to close, apply to hide, this one is apply to open. All right, and the style, I choose 3 pixel. You can choose any of your choice and the color of your choice. It depends on you. Okay, and the levels are this. The levels are numerous, so you could just screenshot it, and right, you can just screenshot it while I scroll it upward, or you can write it down, pause the video and set it on your chart right now. Okay, let me call it out for you. Let me call it out. This is first one. We have 62.61, 71.28, 53.95, 34.8, 55.51, 46.96, 26.36, 82.81, 76.53, 87.89, 91.03, 40.81, 17.73, 66.82, 96.97, and 10. Okay, you can choose the style of your choice. Let me choose a different pixel right here. You could choose any one that you like. All right, let me choose blue. You could change the pixel to your default, to anyone that you like. You can choose one, you can choose two. Let me choose 3 this time. All right, and you click on done. Sorry that you click on done. So this is what we have right here. I change the color of that, right? And for the new people that don't know the Ichimoku settings, let's go to that. Ichimoku on the main chart, you click on the F button right here to add the Ichimoku. All right, the Ichimoku is default, the default setting of Ichimoku. The Tinko sen is 9, the Kenjun sen is 26, the Kenjun span is 52. All right, and the styles, I only make everything right here your background color. If you have background color, let all this be your background color. Okay, and the pixel should be 1 all through, except for the Tinkun Sen, which you're going to be using 4 pixel, and any color of your choice. Use 4 pixel. You want it to show very clearly. Use a color of your choice, and you click on done. After that, you are good to go. Don't bother about these ones here. This is a setting of the excellent strategy. Well, I leave it here because I still use the strategy right now. I still use it to trade. Okay guys, let's get to work. Remember, before you take trade, I talked earlier that you're going to be looking out for a spiking market. Remember, a spiking market, that is when you take your trade, because you need to see zoom it to see what is happening in the market, whether it's spiking or trending. At this point, look at what is happening here. At this region, there is a zone. You should also learn to draw your support and resistance level to use this strategy well. Let me show you a tip of that. I like to use this particular rectangle to draw my zones. I take here as a zone because that is the lowest. I'll take also here as a zone. Sorry, this is a demo account. Let me take here also as a zone. Right, this is 2 zones. The zone upward, I call it, is a supply zone. The zone downward is demand zone. Okay, you see that within these zones the market has been spiking. That means it is ranging around that period, and this period is sweet to catch spike. Is also one of the best place to catch your spike. If you are a spike catcher, you want to catch spike, this market is very sweet to catch, whether it is ranging or is spiking. That is the best time to catch spike. But when it is actually on a downtrend, like at this moment, when it's downtrend, it's not good to catch spike at this moment. When it's trending downward, it's not good to catch. You see, the spike was just little spike, and it's going down, even though it actually will come up again to give you profit. But if you have a low account and you enter the market, this spike may not have reached your profit right here and still go down. So that's why we prefer a ranging market or a spiking market. At this moment, let us evaluate this point. These two blue lines here are the zones. Okay, they are the demand and supply and demand zone. So at this moment, we see that the market always spike when they reach or come closer to that. Let us zoom out a little bit. Okay, this stuff doesn't have a special zoom level. All right, note that it has no special zoom level because we are zooming in and out to see what is happening in the market. So let us check it out. Let's zoom out a bit. If I come to this point here, let me see. This is 1 minute time frame. Okay, and each of, let me remove these zones. I think you have seen what I meant. What I use this for is for knowing your zones, whether it's ranging or spiking. At this point here, if I bring my line, this is a level. On that line, this is a level. Why do I choose them as a level? They are resistance levels. The market came to this point, the first green, the first red, and it spiked. It came up again near the other side and it spiked. So I'll take there too as a level. All right, now let me tell you how you use this one here to trade with these things here. Now let me do this. The market has been spiking. I need to do something here so that you get to understand one thing again here. Let me paint some of this. Let me paint some things here. Okay, I want to paint some levels that you need to pay attention. Level you need to pay much of your attention to if you are trading. Okay, these levels you need to pay attention to them because they work wonders. Alright, I just worry this video is going to be a little bit lengthy, but just it's for your own good. I want to explain this thing so that you understand where I'm going. Pardon me if I'm taking your time. Okay, pardon me please. Alright, these are the levels that you're going to be putting more of your time into. Okay, the levels you should put more of your times into. Okay, now we are here. This is where we are. Okay, let me draw this a bit upwards. Right now, this is it. This is RSI, and this is how it moves. You see how once the market comes near, when the market is close to any of this blue line, you should be very careful of the market. You should be very careful, very careful, because the market can change at any point. Let me change the color of that thing to be yellow so you don't see. When the market comes to any of this blue line, okay, when the market move down to any of this blue line, these blue lines here, that is the levels on the RSI, you should be careful because the market is going to reverse spike. A spike is along the corner. So when this is boom 500, right? So when the market actually go look at this point here, it came down to 26 points. Now let me tell you, the limit, the level 10, I call it buy limit. The level 10 is buy limit, where you take your buy. If you are buying from this level, if market reaches to that level, you are sure to take your buy. Look at what's happened here. The market actually came up from this side, came down to this level 10, and what happened? A spike occurred. This 10 level and 0, 17.73, 10 and 0 are the buy limits you can use to buy. That is instant buy when the market is an uptrend for booms. Okay, now look at it. It came down to that level 10 and the spike happened. All right, it spiked up. Because it's a spiking market, it is when the first spike happened, the market actually came down to this blue line, which is the 46.96. Then spike again, came down again to 34.80, spike again, came down again to 46.96, spike again. So all this is actually the levels you should take into this. Where I painted yellow is where you should take more of your time and study them, study what happens along those period, and take it to work. When the market is approaching any of those blue lines, be careful, or a spike might catch you. All right, or let me assume again, this market, when the market is actually at this point here, let's do this thing. At this point here, this market spiked. The market actually moved here. It spiked up to this point, and it is moving down. It is moving down. It came to the level of 66.82, and it spiked again. Okay, so that is why you should always look out for a spiking market and take more look at these levels I used yellow to cover. They are areas where your look should be. Okay, let me look out for crush 500 or crush 1000 or any of the index. All right, now if I choose for crash, also look for a spike. Look at this point, the same area. Let me not go and no time to waste here. The same area I told you. Look at how they have been walking around this area, spiking and spiking and spiking. Look at it here. The market actually spiked, reached to this point. In this point, 96.97 is your sell limit. When the market is about 96.97 or 91.03, that is your sell. You should place your instant sell. Okay, because it will spike soon. Look at it here. The market has actually reached our sell limit here. It moved up to our sell limit, which is 96.97, and guess what? A spike happened. And when the spike happened, we should also wait for the second spike or more spike if the market is actually spiking or trending downwards for crash. Okay, look at it, moved up to the next level, and what happened? A spike has happened. It moved up to the next level here, and a spike happened downward. Okay, and again it's moved up to that same sell limit of 91.03, and a spike happened. We should also look out when the levels of resistance comes to play really good here. When the spiking, a spike happened here. Let us choose look at this one. Spike happened, it spiked this point. Okay, now the market came down here and it was moving up. It moved to that same level. You should know that it's not safe for you to enter a buy. You should rather leave it or sell it. When you sell it at that resistance level, look at what happened. It crossed a before. Some of us that trade breakout. This actually broke out. This actually broke out, but it's a fake breakout. Look at it. It broke out of that first resistance level, but it's a fake one. It spiked. That's why did it spike? Because the market is spiking. It's on a downtrend, already on a downtrend. So let us check it out. If you go to one hour time frame, you will see that it's already spiking. Look at it. It's a downtrend on a 1 hour time frame. Is on a downtrend. So you should not look for buys. If you are buying, is you are scalping, you should be scalping, not to stay longer in the market. Okay, back to our business. Look at what's happened here. Again, from here, when the market actually spiked, it spiked first one here, and let me show you again. It spiked first one right here, and the market moved up to that same level. You should know that a spike is imminent and you have to exit your market. You enter another sell. Same thing happened here for the main chart. Let me use arrow. I think you should see it more with arrow. You should see it more with arrow there and arrow here. Let me show you one thing. Look at it. The spike, this market actually spiked first one at this point, and also at the main chart, that is this point. It spiked there. All right, and when it spiked at that point, then it is we should expect to sell again at when the market reaches to this level again, that is the at the resistance level. Look at it, it's either will sell at this line here or the other second line here. And if we sold at this one, we'll have a little drop down. If we sell at this one, we'll have a sniper drop down. Guys, look at it here. You enter here and here too. Let me zoom out a little bit so you see it well. And here too, the market has already come to the other one too. Let me draw the line too. The markets are already, this is the level. Market has already reached to that level. So, and the market is downtrend. You should also know that a spike is imminent. You enter your sell, then you see a sniper, a sniper. You call it a sniper, right? A sniper. Now, when you get a sniper, now you see another spike. It happened to this point. This is a level of our buy limit. This level 26.26, 17.73, 10 and 0, they can be your buy limit where you can buy. So from here now, you that are a scalper, you can scalp some candles here before the market goes up again. When it comes close to this actual one, this line here comes down either to this point or this point or this line here, you should expecting a spike. And once a spike has happened, your next spike you should be at the top of this your already made resistance level, which is here. Although it has crossed it, but I expect a spike should happen even because of these lines that are already in this place, because here is a 1 minute resistance level, which should spike around there. It should spike around there. If it not spike and crossover, it have to spike because it's already a pattern that should happen. You should follow it, right? That is how to use these settings here. When the RSI is close to any of this lines here, you should actually expect a spike. You should know where I told you is the buy limit and the sell limit. Okay, now for the Ichimoku in the main chart, you see it work. You see it work already. Works best, perfectly well. Okay, for the Ichimoku in the main chart, once the market is already on a downtrend, you should not expect the market to cross the Ichimoku without the spike. Look at a spike happened long here, and the market come to the Ichimoku and the spike. It come to the Ichimoku again and the spike, and this is how it has been happening. Look at it at the point when it crossed over. Even the crossover, because here already is at going up to the over bot level, is spiked again because the overall trend of this market is a downtrend. When it is on an uptrend for crash, these things won't work perfectly as it is right now, but because it is in a downtrend, that is why they are working perfectly. All right, so look at every time it comes to the Ichimoku, it has to react to it. From here you see the chart. Whenever it comes to the Ichimoku, it reacts to it. It reacts, either it crosses a bit or it is touching it, it will spike. All right, now this is how you use this setup to catch your spike. And like I said, it is not recommended for you to use a high lot size when catching spike. It's very best for you to use a low lot size to catch the spike. Use low lot size 0.01, 0.02, so that if the market is going against you in a long direction, you could have a good equity to hold if the market is in your favor. Okay, guys, don't be greedy. Don't be greedy. I repeat, don't be greedy. In this business, we take it as a business and not a gambling area. Okay, all right, this is the simple strategy I've got for you guys. All right, but for the end of this week, maybe on the Tuesday, on Wednesday or so, I'll be dropping another scalping strategy. 5 minute scalping strategy. You shouldn't miss it. If you have missed if you don't like to use the 2 minute strategy I uploaded last week, then wake up. We anticipate our next video, which is 5 minutes scalping, sure scalping strategy that you can use to trade. I'll be doing a live trade also, so you see get it like I did on the other ones. I would did a live trade so you get to see how it work. All right, guys, this is HumbleFx. signing out. Please, I need you to subscribe to this channel if you are new. I need you to comment on this video. I need you to ask your questions. I need you to like the video, to share to your friend. Let's us get to 1,000 subscribers before the end of this month. Okay, until then, I remain HumbleFx, by name God's Will Innocent. Thank you so much and have a lovely day.